PantheonAI presents S&P hits ceiling, Apple a dud, inflation risks return. Good morning, everyone. Welcome to the PAI Morning Briefing. I'm John, your host from PantheonAI, and it is June 10th, 2025. Are you ready for a packed show?
Absolutely, John. Good morning, folks. I'm Sarah, and I am so ready. We've got a busy one today, don't we? From the latest market numbers and trends to some truly intriguing stories making waves. So grab that coffee, settle in, and let's just dive right into the heart of the market, shall we?
Let's do it. Kicking things off with a quick market overview. The S&P 500 is currently trading at approximately 6,028.24. That's a modest gain of around 0.3% for the day. Over in the Dow Jones, we're seeing 42,850.46, which translates to an increase of about 0.26%. So pretty stable there, Sarah?
Yeah, it's steady. And the Nasdaq, meanwhile, is holding strong at nearly 19,664.78, up roughly 0.23%. Not to be left out, the Russell 2000 stands at about 2,158.57, showing a slight gain of around 0.36%. So overall, a pretty green picture in the traditional markets this morning, John. What about crypto?
Well, that's where things get a little more spicy. Let's talk crypto for a moment. Bitcoin, the original digital gold, is priced around 109,012.38, but it's actually feeling the heat a bit, down roughly 1.17%. Ouch. But then you look at Ethereum.
Exactly. In contrast, Ethereum is showing some real resilience, trading at approximately 2,740.5 and up by about 2.2%. It just reminds you, doesn't it, that even in the digital domain there's constant volatility, but, there's also plenty of excitement. It's never boring in crypto.
Never boring is right. And speaking of excitement and volatility, how about those S&P near record levels, Sarah? There's been so much chatter lately about the S&P 500 almost being back to its record highs. But the message from analysts, from the experts, it's pretty clear, isn't it? While we're nearing these peaks, investors really shouldn't get too comfortable yet. It's a cautionary tale for sure.
It really is, and it's drawing a lot of attention. Market observers see this current rally as a sign of strength, but there's also this subtle warning that resistance levels ahead could spark some corrective moves. It's almost like reaching the top of a roller coaster before the big drop. It's a thrilling view, but there's always that reminder that what goes up might come down. It's that classic market psychology, isn't it?
It absolutely is. And that actually brings us smoothly into our next deep dive, major market trends. Over the past few sessions, we've seen this robust activity in traditional equity markets, which, as you just pointed out, Sarah, is now contrasted with those mixed signals from the cryptosphere. The S&P 500's near-record performance today is certainly uplifting, but history, as we know, tells us that record highs can sometimes serve as significant resistance. It's like standing on the shoulders of giants, but then you suddenly realize you're not as high as you thought. I have this joke I like to share.
Oh, here we go, John. Tell us the joke.
The market's like a stubborn cat. It may come close to the top of the counter, but it rarely leaps all the way up without a few scratch marks to show for it. That just means investors need to keep their eyes wide open and not get lulled into complacency. But on the flip side, that divergence in crypto performance adds another layer to the narrative, right?
It really does. Bitcoin's dip, even if it's slight, contrasts so much with Ethereum's robust recovery. It's a huge reminder that while digital currencies are getting mainstream attention, they really should be navigated with the same cautious optimism that we apply to traditional equities. Everybody loves a good comeback story, for sure. But as investors, we know better than to put all our eggs in one basket, even if that basket is made of blockchain code. This interplay of strengths and weaknesses across asset classes, it's just a sign of a maturing market that values both risk and resilience, wouldn't you say?
Absolutely. It's a fascinating dynamic. Now let's take a comprehensive look at some of the top stories making headlines today. There's a flurry of news out there, and although some stories repeat with similar themes, each repetition kind of reinforces the importance of the underlying trend. First, obviously, we have that recurring narrative that the S&P 500 is nearly back to its record highs. Every time this headline appears, the key takeaway is the same. While reaching these levels is exciting, investors need to watch out for resistance. It's like reaching the top shelf at home. Sure, you might have what you need right up there, but getting it down might require a little extra effort, or in this case, a market correction. What else is grabbing attention, Sarah?
Well, next up, there's a whole set of stories centering on Apple and its latest Worldwide Developers Conference. And this year's event, well, it didn't offer any major AI announcements, which has left some market watchers scratching their heads, frankly. Instead of the expected breakthroughs that could have really propelled the company further into the AI arena, Apple's event was described by some as, quote, a dud.
A dud. Yeah, I saw that. So the discussion now turns to what's next for the stock, right? Analysts are looking at how the tech giant could pivot its strategy to leverage AI in driving iPhone sales and enhancing its ecosystem overall. It's a bit like expecting fireworks on the 4th of July and getting sparklers instead. Still bright, but not quite the spectacle you'd hoped for. For Apple, the challenge remains to innovate fast enough to keep pace with its competitors, while also maintaining that brand loyalty that has defined its identity for decades. What's another big one on your radar?
Another significant story in today's lineup is the cautionary message around inflation. There's mounting evidence that inflation might start to rise again, driven primarily by high tariffs that have the potential to push prices higher. Even though the spring period showed signs of easing, marking the lowest inflation in over 4 years, the specter of tariffs looms large.
Yeah, it's a big one. Think of tariffs like an uninvited guest at a dinner party. Even if the evening started off pleasant, that guest can quickly change the mood and cause everyone to feel a bit edgy. The concern here is whether we'll soon see the ripple effects in the consumer price index for May, and what that means for both Wall Street and everyday consumers. Definitely something to keep an eye on. And then there's always those interesting outliers, isn't there?
There are. And then we have the story about 20 stocks bucking the downward trends on Wall Street. Even when the broader market is sliding into predictability, there are always those gems that seem to defy the norm. Analysts have been cutting estimates for a range of companies, yet these 20 stocks have managed to hold their own or even perform better than expected.
It's a classic story of market resilience, really, and a reminder that sometimes the underdogs are the ones that provide the most interesting investment opportunities. Who hasn't enjoyed rooting for the unexpected hero in a blockbuster movie, right? So far today we've covered quite a bit. The S&P nearly reaching record highs, Apple's lackluster developer conference, the inflation caution due to tariffs, and the intriguing case of those 20 standout stocks.
And each of these stories has multiple iterations in the media, which just underscores how significant these trends are to market participants everywhere. It really paints a picture of an ecosystem that is both dynamic and unpredictable. Every repeated headline is just a call to investors. Stay vigilant, think critically, and be prepared for whatever comes next. It's not a set-it-and-forget-it market right now, is it?
Not at all. And moving on to our detailed sector analysis, let's talk strategy and what these developments mean across different parts of the market. In the technology sector, Apple's event has certainly been the talk of the town. While the lack of groundbreaking AI announcements was a disappointment for some, there's still plenty to be optimistic about. Apple continues to innovate in areas like augmented reality, wearables, and ecosystem integration. Some analysts propose that instead of looking solely for flashy AI breakthroughs, investors might want to focus on how incremental improvements can drive consistent revenue growth and maintain competitive advantages.
That's a good point. It's like slowly but surely turning a reliable locomotive into a high-speed bullet train. The gradual buildup might not win awards for speed, but it sure guarantees a dependable service. And then in energy, John, the global landscape remains as volatile as ever, doesn't it?
It really does, Sarah. With concerns about tariffs and international trade policies, energy prices are likely to experience bouts of unpredictability. Global events and OPEC decisions come into play, influencing everything from crude oil prices to renewable energy investments. The conversation here isn't just about supply and demand, but also about how geopolitical risks can subtly shift the balance. Imagine being on a seesaw where both ends are influenced by unpredictable gusts of wind. That's energy for you right now. For investors looking to navigate this sector, diversification and hedging remain key strategies. How about finance?
Turning to the finance sector, traditional banks and financial institutions have perhaps been the unsung heroes in this environment. With rising market uncertainties and the possibility of fluctuating inflation, these institutions have a dual role: managing risk and capitalizing on shifting consumer behaviors. The financial sector's performance is closely tied to consumer confidence and interest rates. As we anticipate potential moves in the consumer price index and other economic indicators, financial stocks might serve as a bellwether for broader economic health.
Yeah, it's almost like watching the pulse of the economy. A steady beat that can sometimes quicken with excitement or slow down with caution. Now let's pivot to the global market implications. The macroeconomic environment remains a tangle of interconnected events, ranging from domestic policy shifts and inflation warnings to international trade disputes and energy uncertainties. In Europe and Asia, market participants are watching closely for signs of economic stabilization or further turbulence. It's not just a U.S. thing, is it?
Definitely not. Tariffs and inflation aren't just issues for U.S. investors. They have ripple effects across the globe. For example, a rise in inflation due to tariffs could lead central banks in other parts of the world to adjust their own monetary policies, which in turn affects global liquidity. In this interconnected world, a decision made on one side of the globe can send shockwaves through multiple markets, reminding each of us that when we speak of market trends and forecasts, we're really talking about the pulse of an entire global economy. It's all connected, isn't it?
It really is. And our expert insights today point to a recurring theme: adaptability. Whether it's traditional equity markets approaching record levels or crypto assets displaying contrasting trends, the underlying message is clear. Markets are dynamic and multifaceted. Investors and traders should maintain not only a diverse portfolio, but also a keen eye on the political, technological, and economic shifts that shape our everyday financial landscape.
Yeah, I love this analogy some of our experts have used. They've compared the current market environment to a finely tuned orchestra, each section playing its part, sometimes harmonizing beautifully, and sometimes coming in a beat too early or late. The art for investors is to learn when to lean into that harmony and when to brace for a sudden change in tempo. It's about being nimble, right?
Exactly. And as we look ahead, it's important to keep an eye on emerging trends. The absence of major AI breakthroughs at Apple's Worldwide Developers Conference might open the door for competitors to seize the moment, which will be interesting to watch. Additionally, that persistent narrative around tariffs and inflation is likely to influence policy debates in Washington and beyond.
And let's not forget the intriguing performance of those 20 stocks that are defying gravity. They really serve as a reminder that even in an environment where caution is warranted, there are always opportunities for those willing to look beneath the surface. So before we wrap up, let's address a few thought-provoking questions for you, our astute audience.
Yeah, we'd love to hear your thoughts. What are your strategies for balancing risk during times when market highs seem to flirt with record-breaking figures? Do you feel that traditional equities and digital assets will continue their current divergent paths, or is a convergence on the horizon? And finally, how will rising tariffs and inflation affect your long-term investment theses? It's these kinds of questions that really make the world of investing so intellectually stimulating, don't you think?
Totally. I'd love to hear your thoughts. Feel free to reach out and discuss with our AI copilot or on our social channels. Now, as we approach the conclusion of today's briefing, let's just quickly review our key takeaways, John.
Right. So the traditional market indices are inching upward, with the S&P 500 nearing record territory, but history warns us to be cautious of potential resistance levels. Over in the tech arena, Apple's rather subdued Worldwide Developers Conference reminds us that innovation doesn't always come with fireworks, and sometimes the subtle shifts are the ones that truly matter over time.
And our inflation watch remains as spirited as ever, with tariffs posing a risk that could soon reanimate price pressures, potentially affecting consumer sentiment and economic stability. And finally, those 20 resilient stocks defy conventional trends, offering a glimmer of hope and an invitation to look for opportunities, even when the broader market seems predictable. What a day!
It really has been. And I want to extend a heartfelt shout out to PantheonAI, your information copilot, as always. Our mission is to empower you with insights, nuanced analysis, and a healthy dose of perspective, so that you, our valued investors and traders, can navigate the complex terrain of today's markets with confidence and a sense of informed humor. After all, learning shouldn't feel like a full-time job, right?
Exactly. As we wrap up this episode, I invite you all to mull over these insights and consider your own investment strategies in light of today's dynamic market environment. How will you adjust your portfolio when faced with near-record highs, subtle shifts in inflation, or unexpected opportunities in traditionally lagging sectors? And when you do make those strategic moves, remember that it's not just about chasing numbers. It's about staying informed, being adaptable, and having a bit of fun along the way.
For now, thank you so much for joining us on this morning's journey through market trends, in-depth stories, sector analyses, and global implications. We've covered a lot of ground today, and we truly hope you found the conversation both engaging and thought-provoking. Make sure to tune in again tomorrow as we continue to explore the ever-changing landscape of global finance. And remember, if you have any questions or need additional insights, our AI copilot is always at the ready to help guide you through complex market scenarios.
Until next time, keep your eyes on the charts, your mind sharp, and your sense of humor intact as you ride the waves of the market. And always keep in mind, learning shouldn't feel like a full-time job.
Have a great day and happy investing, everyone.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.